Hello. Defined contribution looks set to be the future of the British pensions industry. But how are such schemes implementing the big investment themes that impact all of our lives, such as climate change? Well, to find out, I've been joined by James Rowe. Hi, James.
Hello.
Hi. And you are Head of UK Institutional DC Clients at BlackRock.
Correct.
Good to have you with us, James. Perhaps you can start with, the DC market is evolving, but what are the big trends that you're seeing at the moment?
So the UK pension system is going through a period of transition. As the UK shifts from DB to DC, focus has moved to ensuring that DC members achieve a stable retirement income.
Yeah.
As DC schemes have grown and DB schemes are relatively well funded and secure now, corporates and trustees have really focused an increasingly large proportion of their time on ensuring that the DC scheme offers members the best possible outcomes in terms of retirement income. Policymakers have also begun ensuring that the regulatory focus is around value for money and retirement income. And over the next 3 to 5 years, we see three themes impacting the DC market. First is consolidation, the second is portfolio sophistication, and the third is retirement income. So let me just expand on each of those.
Okay.
The first is consolidation. So auto-enrolment in the UK was a tremendous success,
Yes.
and it brought millions of DC savers into the pensions market. But with that has introduced the proliferation of smaller pots. So by 2030, we expect to have over 27 million smaller pots in the UK. And the market has responded to that by evolving towards a fewer number of larger pension schemes going forward. That leads to my second point around portfolio sophistication. With a smaller number of larger pension schemes, they have the critical mass and the governance available to invest in a more sophisticated investment portfolio. With that, we're seeing greater alignment between their investment strategies and their sustainability goals or outcomes, and we're also seeing the doors being opened to a broader range of asset classes, including private markets, so opportunities within infrastructure, private equity, private credit, or real estate. And finally, retirement income. As more and more people in the UK approach retirement with predominantly a DC pot in order to generate the income that they need to sustain their retirement, there's a greater focus on the challenges and the decisions that members are going to have to make, which will impact the rest of their lives. The goal here is to optimise around income in retirement, but it isn't always an easy question to answer. Optimising retirement income requires a holistic view, thinking about an individual's financial situation in aggregate. And key to these efforts is the need to provide greater education and tools to support the industry and members in making the best decisions for them.
So where are DC schemes on their transition journey to net zero?
So the world is responding to the challenges posed by the climate transition, and DC pension schemes are really at the forefront of thinking around this, with trustees, sponsors and consultants really thinking about both the opportunities and risks associated with the climate transition. Integration is now a baseline requirement for UK pension schemes, and many are going further than this by adopting sustainable strategies within their investment portfolios. In November 2023, the PLSA announced that more than 2/3 of pension schemes now have a commitment to net zero, up from over 50% in May the previous year. Of those that have made a net zero commitment, 9 out of 10 are targeting 2050 as an overall objective, with many looking to get there sooner than that. And we've seen some research come out of Buck, the HR pensions and employee benefits firm recently, which found that 67% of companies now expect E, S and G criteria in their pension scheme investment choices. So we're really listening to this feedback as an asset manager, and we're working with our clients across many different initiatives to prioritise sustainability within their DC glide paths.
Staying with climate change, how are DC schemes adapting their investment strategies to not only cope with the challenges but also capture the opportunities?
So DC schemes are thinking about sustainability integration for a number of reasons. Firstly, it aligns the investment options that they have with the long-term investment horizon of their members. Secondly, it's looking to reflect the demand from their members for more sustainably orientated strategies.
Yes.
And thirdly, this is about ultimately improving risk-adjusted returns for underlying members. If you think about the transition to a low carbon economy, this is going to be one of the most fundamental shifts in capital within our lifetimes, and it's going to impact every asset class. The features of private markets actually are quite well placed in order to help facilitate or provide the technological advancements required in order to facilitate the transition. And companies are going to be tracking their emissions and their data a lot more closely going forwards. So across the board, the transition to a low carbon economy is both an opportunity, but also a different lens for which to look through investment risk. The transition itself requires that taking advantage of that, you need to have a really good understanding of where cost bases are going and where technological advances are going to be required. That's why it's really important for us to have to organise ourselves around this investment theme.
Okay, James, thank you. Last question now. How are you guys at BlackRock working with DC schemes on their journey?
So as a fiduciary, it's really important that we listen to our clients and help them meet their challenges in what is an increasingly complex and challenging environment. Our clients have different views on sustainability and transition, whether that's to mitigate risk or capture some of the opportunities that we've discussed today. Some want to increase their exposure to transition. Some want to align their portfolios with a net zero pathway to reflect the commitments that they've made. And others are looking to achieve an impact in terms of the sustainability outcome they're looking to deliver, as well as the financial return. To help investors align their portfolios to their transition objectives, we think about what's their starting point, where do they want to go, and how can we help them execute and track progress against that objective. And BlackRock's broader approach is very similar. Our approach is rooted in our fiduciary duty and informed by three principles. Firstly, understanding the client's objectives in detail. Secondly, looking to deliver the best risk-adjusted return within the mandate that we've been given. And thirdly, underpinning that with deep research, data and analytics. And we apply the same thesis to our investing in sustainability. We can help investors address their challenges, manage their risks, and capture some of the opportunities through the climate transition.
Thank you, James. And speaking as a DC saver, I'm glad to hear some of the things you've had to say today. Thank you.
Thank you.